In the world of automobiles, an alarming trend is on the rise. It's not about the latest electric car model or the newest navigation system. No, this is about something far more serious. Imagine a landscape of millions of car owners, ordinary people like you and me, who are increasingly falling behind on their monthly car payments. Yes, you heard it right. This is not a minor hiccup but a significant issue that's growing at a shocking and unprecedented rate. Let's put some perspective on this. It's like a giant wave gathering momentum, ready to crash onto the shore. The shore in this case represents the financial stability of individual car owners and the economy as a whole. Now you might be wondering, what's the big deal? People fall behind on payments all the time. Well, here's the kicker. We're not talking about a small increase. We're talking about the highest rate on record. That's right. More car owners are falling behind on their payments than ever before in history. That's a lot of people struggling to keep the rubber on the road, metaphorically speaking. But what does this mean for the average car owner? It means that more and more people are finding it difficult to manage their car loans. It means that the dream of owning a car is becoming a financial nightmare for many. And it's not just the car owners who are affected. This trend has far-reaching implications for the economy as well. When car owners can't make their payments, it causes a ripple effect. It affects the lending institutions that provided the loans. It affects the car manufacturers who depend on robust sales. And ultimately, it affects the overall health of the economy. So, we're not just talking about individuals struggling to pay their car loans. We're talking about a situation that has the potential to impact everyone, car owner or not. And that's why this is a big deal. That's why we need to talk about it, understand it, and find ways to address it. Because right now, we are dealing with a record high number of car owners struggling to keep up with payments. The repercussions of this trend extend beyond individual car owners. You see, when car owners are unable to keep up with their payments, it sets off a chain reaction that impacts more than just those individuals and their shiny set of wheels. This ripple effect permeates various sectors of our economy, creating a domino effect that's hard to ignore. Let's start with the car industry. When loan defaults increase, it puts a strain on car manufacturers and dealerships. They are left with an inventory of unsold cars leading to a surplus. This surplus can lead to job cuts, reduced production, and even bankruptcy in extreme cases. Then there's the banking sector. Yes, the very institutions that gave out these loans in the first place. When these loans turn sour, it means losses for banks. This can result in tighter lending practices, making it even harder for consumers to obtain loans in the future. And let's not forget about the broader economy. When households are burdened with high car payments, they have less disposable income to spend elsewhere. This can lead to reduced consumer spending, which, as we all know, is a key driver of economic growth. But it's not just these big industries and the economy that feel the hit. The increased financial burden weighs heavily on households too. High car payments can lead to a decrease in the quality of life. Money that could have been spent on education, healthcare, or even just a night out is instead funneled into keeping up with car payments. So you see, this trend of car owners falling behind on payments is not just about shiny cars collecting dust in driveways. It's about the stability of our car industry, our banking sector, and our economy as a whole. This trend is not just about cars, it's about the stability of our economy. But what's causing this alarming trend, you may ask? Well, it's a perfect storm of factors, each contributing to the other, creating a cycle that's hard to break. Firstly, we have high interest rates. Now, these aren't the friendly neighbor next door kind of high. No, these are the towering, mountainous kind of high. Imagine being a mountaineer standing at the foot of Everest looking up at the peak. That's how car owners are feeling when they look at the interest rates on their car loans. The steep climb seems almost impossible, doesn't it? Then we have stagnant wages. Imagine a hamster running on a wheel, panting, straining, but going absolutely nowhere. That's what it's like for many people. They're working harder, longer hours, but their wages, they're stuck in the mud, going absolutely nowhere. And just when you thought it couldn't get any worse, enter the rising cost of living. It's like a silent thief, creeping in unannounced, robbing people of their hard-earned wages. Every trip to the grocery store, every utility bill, every rent payment, it's all more expensive than it used to be. So, put yourself in the shoes of a car owner. You've got a mountain of interest to climb, your wages are stuck in the mud, and the cost of living is quietly robbing you blind. It's like being caught in a downpour with no umbrella, no shelter, and nowhere to go. It's not just about owning a car anymore, it's about survival, it's about making ends meet. It's about keeping your head above water in a sea of financial uncertainty. These factors combined are pushing car owners into a financial corner. It's a tough spot to be in, and it's a situation that requires immediate attention and action. But remember, every problem has a solution, and this one is no different. So hang in there. We're about to dive into some possible ways out of this financial quagmire. Behind these statistics are real people with real stories. Let's dive into the lives of those who are living this reality. Take Jenny, for instance. A single mother of two, Jenny juggles 2 jobs in order to make ends meet. When her old car broke down, she had no choice but to take out a loan for a new one. She needed the car to get to work, to ferry her kids around. But now, with the high interest rates, she's struggling to keep up with the payments. It's not just about numbers for Jenny, it's about the gut-wrenching decision of whether to pay for groceries or the car loan this month. Then there's Robert, a recent college graduate. Eager, full of hope, he moved to a new city for a job opportunity. A car was essential for his commute. He was confident he could handle the loan payments. But then, the unexpected happened. The company downsized, and Robert was laid off. Here he was, in a strange city, with no job, and a car loan he couldn't afford. Robert's story is a stark reminder of how quickly fortunes can turn. We also have the story of Maria and Jose, a retired couple. They had planned their retirement meticulously, but they hadn't accounted for the skyrocketing costs of living. Their modest pension couldn't keep up. To maintain their independence, they needed a car. Now they find themselves dipping into their meager savings to make the car loan payments. It's a choice between autonomy and financial security. Lastly, let's talk about Sam, a small business owner. He invested in a delivery van to expand his business. But when his loan interest rates went up, the van became a financial burden rather than an asset. Now he's not just worried about his business, but also about losing the van that's become a symbol of his dreams. These stories are not unique. They are echoed across millions of households where people are grappling with the same predicament. Each story is a testament to the human resilience in the face of adversity, but they also serve as a stark reminder of how precarious the balance can be. These stories highlight the very human cost of this rising trend. So, what can be done to reverse this trend? Well, this is a question that requires a multifaceted answer. It's like trying to solve a Rubik's Cube. Each move should align with the next, and it's going to take some strategic thinking. But don't worry, we're not in this alone. There are several possible solutions that could mitigate this issue. Firstly, let's talk about financial literacy programs. Picture this. You're handed a book in a language you don't understand and told to read it. Sounds impossible, right? That's how many people feel about finance. It's a foreign language to them. By introducing financial literacy programs, we can help people understand the language of finance. This knowledge would provide them with the tools to make informed decisions about loans and interest rates. It's like giving them the Rosetta Stone to decipher the financial world. Next, let's consider policy changes. Imagine you're playing a board game where the rules are stacked against you. It's not fun, is it? This is how the current policies around car loans feel for many. Changes could include legislation to cap interest rates, stricter regulation of predatory lending practices, or even government-backed car loan programs for low-income individuals. It's time to level the playing field and make the game fair for everyone. Now let's look at more flexible loan repayment options. Think of it like a choose-your-own-adventure book. Everyone's financial situation is different, so why should everyone have the same loan repayment plan? By offering more flexible options, lenders could allow borrowers to tailor their repayment plan to their individual circumstances. It's about providing a personalized solution, not a one-size-fits-all. Lastly, we need to foster a culture of open dialogue around financial struggles. It's like breaking the silence at a party. Once one person starts talking, the conversation flows. By encouraging open discussions about financial challenges, we can remove the stigma and make it easier for people to seek help when they need it. These solutions require collective action, but they could help turn the tide. So, let's roll up our sleeves and get to work. Because after all, we're all in the same boat, and we need to row in the same direction to make progress. In the end, the issue of car owners falling behind on payments is a complex one. A web of factors interwoven and interconnected contribute to this escalating problem that has reached unprecedented heights. Let's take a moment to revisit the alarming statistics. As we've seen, the rate at which car owners are falling behind on payments is at a historical peak. This isn't just a number or a statistic. It's a reflection of real people, with real lives, struggling to keep up with their financial responsibilities. Then, we delved into the ripple effect of this issue. It's not contained to the individual car owners alone. Like a stone thrown into a pond, the impact spreads outwards, affecting the car industry, financial institutions, and ultimately, the economy. We also explored the root causes. High interest rates, skyrocketing car prices, and financial instability form a potent mix that has driven many car owners into the deep end of debt. And who can forget the personal stories? The heartrending tales of individuals grappling with the heavy burden of car loan payments. Each story is a stark reminder of the human cost behind the figures and the graphs. But it's not all doom and gloom. We also discussed possible solutions to this problem, from more flexible payment plans to stricter regulations on car loan interest rates. There are steps that can be taken to help alleviate this issue. However, these solutions require concerted effort from all stakeholders involved. Car manufacturers, financial institutions, and government bodies all have a part to play. And let's not forget the role of individual responsibility, financial literacy, and prudent decision-making. It's a problem we must address for the sake of individual car owners and our economy as a whole. After all, every journey, no matter how long, starts with a single step. And perhaps together we can steer this issue in the right direction. Now that you're informed, it's time to get involved. It's time to step out of the passenger seat and into the driver's seat. We've shared some alarming statistics, highlighted the ripple effects, dissected the root causes, and heard personal stories. We've also explored possible solutions, but this is just the start of the journey. This issue of high car loan interest rates and struggling Americans isn't just a headline. It's a reality for many. And it's something we can all play a part in addressing. So don't let this conversation end here. Share this video with your friends, your family, your colleagues. Start a dialogue, discuss the issue, think about what can be done differently. And while you're at it, why not dive deeper into issues that matter? Our channel is brimming with insightful content just waiting to be discovered. So hit that subscribe button and join us in this journey of awareness and action. Remember, knowledge is power. Subscribe to our channel for more insightful content.